వచ్చేసా.
Welcome back, and joining us now is Carlos Mera Arzeno. He's Senior Commodity Analyst at Rabobank. Carlos, hi. Pleasure to have you joining us at CNBC-TV18. I first and foremost want to talk about El Nino and the various international agencies which are now advocating caution and perhaps 50 to 60% probability as well of that being a possibility in the second half of this year.
Yeah, absolutely. We, of course, come from 3 consecutive La Niñas. This is the first time we had that in the data. At the moment, we just turned to neutrality, but there's an increasing probability of El Nino by the end of the year. El Nino globally doesn't cause the same sort of struggles that affect production as La Niña does, but it could have an impact over India, Australia, and Indonesia. That, of course, will affect the crops in India, and when it comes to international commodities, sugar is a big concern. It could affect palm oil prices because it affects Indonesia, and it will affect the Australian crops. However, all in all, it's not as bullish as La Niña, because La Niña tends to create adverse effects over southern Brazil, the US, and Argentina, which are key agricultural areas for grains and oilseeds.
Well, absolutely. And you mentioned various crops as well, Carlos. Where would you be most concerned about? Because at this point in time, when I look at this week or the last 1 month itself, most of the edible oil prices actually have been trading in the negative, anywhere between 1 to 7%. I mean, canola is down, palm oil is down, sunflower, rapeseed, soybean, all of that is gone in for some profit taking. But do you think this is exactly the sector that was going to be more concerning about as we move ahead?
Yeah, that's certainly a possibility. Of course, we're talking about a potential El Nino at the end of the year. A weak El Nino might have no consequences at all. I mean, these are just correlations that might or might not be there when we talk about El Nino, La Nina. But certainly, if we have a strong El Nino and we do see that impact over the way in Indonesia, which is likely, then I think palm oil could be one of the big winners here.
All right. You also talked about sugar, and we've seen lower production concerns come in yet again, and we've seen that constant cut in excess supplies that the Sugar International Organization earlier talked about. How are you looking at availability and price moves?
Well, we're going to start the Brazil harvest very, very soon. The incentive to start it maybe a few days, a couple of weeks sooner than normal. Normal will be at the start of April. Brazil will have increased production and also increased incentives to maximize sugar versus ethanol. The ethanol parity at the moment is well below the sugar price. So we do expect to see that availability coming from Brazil. I tend to believe that will contain prices despite the situation in India, that, as you know, the Indian crop is a little bit disappointing. So far, the harvest has been producing very good results, but the rate of milk closures seems to be accelerating. So we don't expect to see more exports out of India than the Indian export quota, which is at the moment 6 million tons.
All right. Well, yes, not too many people expect any more increase or revision of that. Also, the other thing that the global markets are watching is the grain corridor from Ukraine. I mean, that expiry is on 18th of March with expectation that we will see an extension of that. But ahead of that, there's a bit of an increase that we've seen in corn, wheat, rice. All of these prices have jumped up in last 1 week. How do you see 18 March come and go?
Well, we're sort of seeing a repeat of what happened last time that the grain corridor was extended. As you said, the market expects this extension to take place. And there's a lot of international pressure for this deal to continue. Even countries like China having explicit that they want to see an extension. So that expectation in the market, but it's becoming a last-minute thing, right? We're talking about the deal expiring tomorrow, and we still don't have any formal announcement. The Russian position is that they would like to see an extension for 60 days only, whereas extensions of 120 days is what was expected and what was stipulated in the original deal. And I have to say, 60 days extension doesn't seem to be much. First, there are vessels already waiting for inspections for over 60 days in the Bosphorus, waiting to be inspected by the Russian inspectors in order to enter the deal, which is a prerequisite. So a 60-day extension might not bring new vessels, might not attract new vessels to Odessa, to the grain corridor. And as well, Ukrainian farmers, I think they would like to see that reassurance that they will be able to sell the crops. If you're going to invest in your field, you sort of want to believe that you will have an outlet for your produce.
Oh, well, that doesn't sound good at all.
All in all, I think the deal will be extended, but we're running out of time.
Oh, yeah. And as you said, even if the deal is for 60 days, it doesn't really do much for the international markets there. But you spoke about China as well, and China is a bigger producer and consumer for many of these commodities. Is the Chinese demand back? Because that also seems quite fragile, uneven, but it is a recovery nonetheless. How do you look at those markets?
Well, I think China is having a big economic rebound. And suddenly, when we look at sales of different things, that's doing really, really well in the country. However, the largest for the import program is mainly about soybeans, right? China is by far the largest importer of soybeans. We do see soybean imports increasing. However, let's remember China had a very big shift in its hog production, away from sort of backyard farming, pre-African swine fever outbreak, to a very large industrial scale, which is much more efficient. So we do see increasing soybean imports into China, but we don't see them as explosive as they were a few years ago.
All right, Carlos, thanks a lot for joining in with that perspective. Manisha, for apprising us of all the things commodities, more importantly right now, all the things weather itself. With that, we wrap up on this edition of Halftime Report. You stay tuned to CNBC-TV18. Trading Hour comes up next. We have business lunch coming up next. Damn, it's a Friday.